I think it validates everything that retailers have been saying and that we've been talking about really for months and months now, which is the renewed focus among bricks and mortar retailers and the ways in which they're trying to really adapt to the change in the marketplace and the consumer-centric focus on technology and wanting product and service where they want it, when they want it, how they want it. So it's a very consumer-centric play. I think it demonstrates what the Walmart team is doing. Becky just showed the stock price and the numbers from the last 18 months. And I think you've seen the results of some of the investments they already made in their employees and in their training programs and those kinds of things. So I think this is a big bet, but a great one.
Did it surprise you?
Well, I didn't know anything about the deal, obviously, but I think...
But did it surprise you, given the history of Jet and the fact that while it's grown remarkably, it's not a business that's made money? Well,
I think you think about what they're going to get with Jet. They're going to get competencies, capabilities, the customer list, they get the leadership team. So I think there is a lot of value there. Listen, Doug and his team are obviously brilliant. They're doing a lot of great things with an enormously complex business and making progress based on the last 6 or 7 quarters of the returns they've had in the investment. So I would think this is one more investment that's going to be consistent with what they've done already and really going to validate their strategies.
Retailers writ large, though, have really struggled to capture that digital consumer. And there aren't that many companies out there to buy. I mean, pretty much no other companies out there of a certain size to buy if they want to buy into that capacity. So how are they doing on their own, building this organically?
You know, Kayla, that's an interesting, we have this conversation all the time, and the narrative sometimes is about how bricks and mortar is losing at the expense of online. But if you look at any number of the surveys out there, the largest e-commerce platforms, the top 25, all but 3 or 4 of them are bricks and mortar companies. So retailers are online, and retailers are already huge e-commerce players. But the Amazons and 2 or 3 other sites get a lot of the attention. But if you stack those sites up against what bricks and mortar retailers do in their own e-commerce platforms, bricks and mortar retailers are overwhelmingly the largest e-commerce players in the marketplace, and people forget that. They talk about
82%. No, excuse me, 92% of all shopping is still done brick and mortar.
Right.
92%.
It still happens. So now it is absolutely true, Brian, that the growth is occurring. You know, even our revised numbers, we revised our forecast for the year from 3.1 to 3.4%. About 6 weeks ago, and that was due.
When do you see that tapering off? It's easy to go from a small base, right? The numbers look big when you're coming from small. Right. Now that it's bigger, when do you see it rolling over?
I think there's still plenty of room to grow. I think at this point, with only 7 or 8% of overall economic activity on the retail side taking place on e-commerce side, that there's still room for growth, and that's why we're forecasting 8 or 10% as opposed to 3% overall, but 8 or 10% on the online piece.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.